Hey guys, I'm Mr. Dante, and today we'll be talking about mostly my Starbucks trade. I think I posted a lot of it already live, so if you already saw those, I'm sorry, just you can exit this video, I guess. But I noticed that it wasn't very clear. A lot of what I was doing wasn't that clear, at least. And so I wanted to do a video where I'm actually screen capturing my positions and kind of what's going on. So if you can see here, I'll go over my Starbucks trade and what I was actually thinking when I was building the position. So again, trading and investing involves a lot of risk. Trading and investing, you can lose all or more of your capital. So please read your broker disclosures. Nothing I say here is a buy, sell, or hold recommendation. It is simply, for educational purposes only. So take it with a grain of salt. So with that being said, again, I'll walk over my train of thought with the Starbucks position and kind of what led me to put it on. So if you can see here on my screen, I have 8 units left. Oh, sorry, 8 contracts left of the option for $55. I had originally bought it, as you can see here, for $364 for the 8 that are remaining. And the current market value of them is $2,228. So it's about, so far, an 8 to 1 or so. So when I first entered this position, the first thing I noticed was that, so I got in when Starbucks was here around like 47, 30 something. And so basically my train of thought was it had pretty much free fallen. The previous market close, it looks like on 6/19 at noon. It had closed right around 57, 52, and then the next day it had opened around 54.99, and it had fallen to 52. And then so the first thing I did was obviously draw my lines. Oh, here's my target. Anyway, not my target. Here's the last lines I drew. So let me remove those. So remove this trend line. And if you don't know how to use interactive brokers, I think it's redundant on my channel, but there's obviously a video on how to use the platform and how to set it up. So it had fallen, and so if we go back in time here, you'll see. Let me move this over here. You'll see that. So this is when it had fallen, right? So as the market's falling, the first thing I'll do is I'll look at when was the last time the price was here, right? So if today was June 12th. Right, so the first thing I'm gonna do is draw my line. And so then I'm gonna go back in time and see when was the last time price was there. To give me some context, because I wanna know, you know, in relation to current price, where we're at, right? So we're in June, so we're gonna go back, we're gonna go back, we're gonna go back. And we're going to go back further. So you can see at this point, we're going back, you know, almost a year. So for me, all things being considered, and so here it is. So all things being considered, being that we're at the lows of almost past a year, and this one was actually December 16th, I was pretty comfortable with Starbucks. At this point, there was like some news about Starbucks closing and all these other things. They had closed like 110 stores, something like that. So I live in like West Hollywood, Beverly Hills, and there's like 100 probably in my neighboring zip code. So the news seemed like, you know, kind of like BS to me. So here was the last, so then I went back in time and I went back to 11/3/2016, and this was the last time price was here. So then what I noticed is, well, last time price was here, it came all the way down here. So for me, a lot of times, like I said, I consider price action. So I look at the candlesticks, like, obviously, you know, relative to the time frame they're in. But I also, I like to consider them in relation to their wick, right? So what moves price, right? So if you know much about the stock market, you kind of know that what moves price tends to be, lack of willing buyers. So when there's a lack of willing buyers, price go down. When there's a lack of willing sellers, price goes up, right? So price will keep on going up until there's essentially zero willing, price will keep going up until it's essentially zero willing buyers, and will go down when there's zero willing sellers. That's the best way I heard it put by one of my friends, Chuck Fulkerson. So if you know me, I always cite my sources, quote, like I always give credit where credit's due. So he's the one that really put that into perspective for me. So with that being said, I look at the wicks of like somewhat like unfilled orders. So I went back to the last time that price was here, if it had been June and not today. And then then I dragged my line down to here. So I see 51. And then I draw my line at the bottom of the wick, which was like 50.83. So then what I did, if I remember correctly, is then I set an alarm. So then I'll attach alert when price is activate here. So I set the alarm, and so I kind of forgot it, right? So fast forward in time, and I like to do a lot of these analysis like on Sundays. So I hate scrambling when the market opens and I'm trying to figure out like, okay, what I want to get in and what I want to buy. So usually I do these kinds of analysis for my favorite stocks, my favorite picks, and then I have them all right here on a Sunday or a Saturday when the market's closed when it comes to stocks and futures. And then I set the alarms, and then when price gets there, I kind of just look at the volatility. So a lot of times I just look at the change percentage, and then I'll see, you know, if the VIX is high or low, and based on that, I can kind of figure out market's open. Do I want to buy or sell? Where's the VIX? If it's price falling, then I can kind of figure out if volatility is high, probably want to sell something, whether it be a vertical put or whatever, if I'm bullish or a call if I'm bearish, and so on and so forth. So, so I set the alarm, and so then I think, to be honest, I think I got in first. I bought some of the contracts at like 47 when it was like at 50, and then I bought more when it came to the bottom of the previous wick. But I remember I loaded most of my contracts that had fallen to 47, and I think that went back further in time. I'll do a video on that later, detailing like my different time frames. I know if you see my videos, so you can see usually to have like multiple time frames. Here you're just looking at one, and that's mostly because I'm just making an example and going through my train of thought. So price came explosively into the sun, right? When I finally got in, it was like right around here. And so then I said, okay, volatility's high. Do I want to sell a vertical put, or do I want to sell a put naked? I was like, no, it's still too risky. I don't like selling naked puts. But what I did know is doing price action, and being that I'm a big follower of supply and demand as depicted by Sam Seiden. I was a Training Academy student. And so being that I know supply and demand well, and again, I'm not going to go into supply and demand. That's not my territory. It doesn't belong to me. It belongs to him. He created it. He's the father. He's the inventor. So I'm not going to talk about so much supply and demand mechanics on this channel. But if you want to look into price action on your own will and accord somewhere else, by all means do so. I might go into accumulation distribution or something like that. That's not supply and demand. Just to be fair to him and out of respect to everyone that's come along my way. So, but basically based on price action, I could tell, okay, well, when last time price came here, it exploded away from that price, right? It came here and then it kissed it, it danced here, and then it shot up. Looks like the same day up to like 53. So I was like, okay, based on price action, I'm fairly certain it's going to go past 55. And I kind of knew that with like a pretty strong degree of accuracy. People will say you cannot time the market. I will not tell you that you can, but you can time the market, in my opinion, with a very strong degree of accuracy and kind of know where price is going to go. So my target is usually making 1,000 a day with like a $10,000 to $20,000 account. I think you can do that with pretty minimal risk and maximum reward. Again, I don't care if you make 1,000 a day, but then your drawdown days are like 2,000, right? Like that's not cute. You know, like that's not impressive. So it's always important to consider your risk reward and consider your gain days with your drop down days. So I know a lot of you guys that follow traders on the interwebs, on the World Wide Web, you'll see a lot of traders, oh, look, man, I made 1,000 today, I made 500 today. Okay, well, great. Well, one, what's your account size? Because if you made $1,000 over $1 million, that's crap, you know. Two, okay, but what's your biggest drawdown day? So for me, risk reward is everything. And I think if you're a follower of Sam Seiden or Supply and Demand or Trading Academy or Power Trading Radio with Merlin, who I love, you know risk reward is everything. So I was, okay, so I could buy the in the money call, right? And in the money call, you know, it was, you know, when you're buying that, you can buy the stock, right? So what are your options, right? So if you're long Starbucks, you have a few options. You can buy the actual stock with a stop loss, hopefully. You can buy the stock with a put, you can buy the in the money call, and you're paying a lot of intrinsic value, or you're paying at least some extrinsic value, excuse me. So you're paying for time decay, you're paying for whatever, but you're using leverage. You can also consider buying out of the money calls, and that's very risky. And again, I'm assuming that a lot of you guys watching my channel to some degree know price action, because you don't just want to buy out of the money calls because you're really gambling. Like, I know price action, I know supply and demand, and I can tell with a pretty strong degree of accuracy when price is going to get there. So again, I've been doing this for a really long time. I might look young, but I've been doing this for a while. I'm going on 10 years of like really studying and trading the financial markets. I really started when I was 16, I guess, really getting into it. But when I first moved to LA and I had commercial money, but I think my freshman year of high school, we were going in BCIS and Business Computer Information System, we were going over trading. So since my freshman year of high school, I was really looking into financial markets. And I think I won an award for like the best or whatever at the time I bought Apple back then. It was like 10 years ago. So anyway, so I've been doing this for a while is my point. So I wouldn't just, if you're new to the markets, I wouldn't just go out and buy out of the money calls that are bullish. And a lot of the reason is also because they can be cheap, so it's very easy for you to over leverage. And you also you have to consider volatility. So in a lot of ways, I had a few things I had in my mind. First of all, I know where price is going to go. Second of all, if I know that price with a strong degree of accuracy is going to go from A to B, it's going to go from my analysis from at least 50 something to 55. I really said 57. Again, I'll post the receipts of me actually calling 57 around June, July-ish. Again, it's not magic. I just know price action well. So I saw that the 55 call, which was out of the money, obviously, it was really cheap. It was like 38 something cents. And I was like, whoa. So part of the benefit and the curse is that you can get in for fairly cheap. The curse is you can go ham and buy more contracts than you should. So I think I bought like 40 contracts, which is appropriate for my account size. And one of my general rules of trading, especially when you're buying out of the money calls, is that when I'm up 100%, I usually unload half of the position, so then the rest of the trade is free. That's just my analysis, my theory. I'm not telling you to do that. That's just kind of, if you look at traders and you look at statistics, a lot of traders give back a lot of their gains and then some. So I wanted to avoid that. And I think if you're new, that's a good rule of thumb. So I would say, so I had two things going for me. I had the volatility trade because I was trading, as Starbucks moved even in my favor, as it was going up and down, the out of the money calls are moving by hundreds of percents a day. Not hundreds of percent, but there was days where I definitely made 100% on it and then went back. So the first time I made 100%, and it was a lot of trial and error here, but I realized a lot of times I gave it back and so on. So one of my rules was when I'm up 100%, I'll unload half of the position and I'll get back in later if it comes down lower. So once I was up 100% on the option itself, contract, I unloaded some, and then it came back down many percentage points over and over and over again, which is why I say you can actually day trade options, in my opinion, even though they're not so much designed that way. I think we're better day trading Forex and other things, but options can be day traded like this. And in my opinion, you're really day trading the volatility. But even if I was down a lot day trading the volatility, it was still a position that I was underlying bullish anyway. So it was a position that I would have wanted to take and I wanted to be in. So again, and you have to, in the US, you need 25,000 to day trade or whatever. I just have to keep that in mind. But you don't have to buy $25,000 worth of a position. So with that being said, I bought it and sold it a couple of times up until now. And so I had unloaded some yesterday and then the day before, and I think if you follow me, you saw that. So essentially, so now we're up at a position, eight contracts, from 40, I think I started with. And you can see that they were bought at, for these $364, they're up to 2,000 something. So that's a good risk reward. That's a good, and again, it's very methodical. There's no like magic here. As you can see, I have some losers. A lot of them were hedges, and I'll go into hedging and inverse correlations later. But it's all about, my biggest loser is, 261, and my biggest winner is, $2,000 on the day. And, if you go by day, $1,000, a little over that. It was 17. You can see here today I made 1,700. my goal, like I said, is on average, winners and losers about 1,000 a day. You can see here, I've realized just $1,600 worth of gains today. So I unloaded a lot of my Starbucks today. My unrealized is 1,000. So a lot of the contracts expired today. So anyway, guys, I am now on 15 minutes, and I know I have a tendency to ramble, so I don't want to do that to you guys today. So let me know in the comments below if this video was helpful. Let me know if there's anything else I can do for you guys, anything I can go over. I am probably going to do this video in Spanish, so you're probably going to see the same title again in Spanish. I'm sorry about that. For those of you guys who don't speak Spanish or don't follow me. So if you guys have any suggestions about how to partition my languages, or my asset class for that matter, I am all for it. I've been, helping people in the financial markets and financial literacy for like years now, but in YouTube, not so much. So feedback is very welcome. If you judge me kindly, like someone says, someone I follow says. So anyway, guys, I hope this was helpful. Subscribe if you do. A lot of my videos moving forward will only be to subscribers only. I'm giving you guys what arguably is thousands of dollars worth of information if you paid someone to do it. So the least you can do is subscribe. So a lot of this information will be for subscribers only moving forward. So anyway, guys, happy trading. I hope this was helpful, and I will see you guys next time.